Hello, everyone. So we are on another episode of Better Tech, where we will be talking to Ben Zweig today, and he's the CEO of Revelio Labs, and they're doing a lot of interesting stuff. So it's a chance to hear about their wonderful startup and also the journey of Ben, and see take some lessons out of it. So welcome on the show, Ben.
Thank you. Happy to be here. Thanks for having me.
So why don't you take the lead and tell us a little bit about your personal self, your past, your work experience, your history, and how you ended up being here?
Yeah, sounds good. So where to begin? Let's see. So I had done a PhD in economics and specialized in labor economics. Worked a little bit in finance, at a hedge fund, then went to work at IBM as a data scientist, and worked on a lot of workforce related problems. So basically analyzing the IBM HR database, trying to understand the workforce dynamics of that specific company, and got involved in the people analytics scene based in New York. And there's a lot of people there who are working on people analytics. So it was a very interesting space and interesting time. And basically thought that a lot of people, a lot of companies are doing very similar analyses, and there were real limitations to how that could scale, and also it wasn't possible to compare across companies. So that sort of led me and my co-founder to start Revelio Labs. And the idea behind Revelio Labs is basically to be something kind of analogous to like a Bloomberg terminal, but instead of for financial market data, it's labor market data. So a ubiquitous source for workforce data and intelligence.
Wonderful. So, and for how long this startup is in existence? I mean, have you raised funding? Tell us a little bit more about your current stage.
Yeah, for sure. So we started selling this in the beginning of 2019, and we had raised a little bit of friends and family in that year. Then we raised a seed in, when was that? I guess 2020. And then we most recently raised, the seed was the following year. So I think that was 2021. And then we recently raised an A this past summer with Elephant Partners. Okay.
And so you kind of raised just in time. I mean, right now this funding scene is a little dried up, but I guess you raised just in time. So yeah.
Kind of. I mean, yes and no. I think we actually did kind of get hit by that a little bit. So things, the funding had was already not so great when we were raising, but I think we've been relatively immune to that because, for one, we were relatively capital efficient, and I think the companies that were really struggling to raise were the ones that were spending without much limit, and also because of the space we're in, we're providing information in uncertain markets, so we're a little bit counter-cyclical in that way.
Okay, so talking about the product, talk to us more about Revelio Labs and what is really, I mean, people analytics is a broad space, and a lot of companies. So which part are you actually in, and what the product really does, and who's the end user of that product, and so on and so forth.
Yeah, for sure. So I think the easiest way to understand where we fit in is by understanding how people analytics typically operates today. So most of the time, companies are analyzing their internal HR database. So let's say you work at a company, you are in their HR database. It says your name, your start date, your job title, all this stuff. And with all of that, by compiling all that information, you can derive some insights about what's going on in a company, where things are going well and what's not going well. But what you can't do is compare across companies. Because if you are working at, let's say, Disney, you can see what's happening at Disney, but there's no way that you are going to get access to the HR database of Netflix. So if you want to see what's happening at a competitor, it's pretty much impossible. I mean, the HR database of companies, I mean, that's a locked box. Like, no one's getting access to that. It's even hard enough to get it internally if you work at that company. But if you're outside that company, there's no way. So we started thinking, what if we could take kind of the universe of publicly supplied information, and basically reconstruct or approximate the HR database for every company. So, just like if you work at a company, a lot of information is in the HR database, you also probably volunteer that information publicly. So you might have a resume or a LinkedIn profile or something like that, where you say your start date, your end date, your job title, your skills, your previous company, the activities that you do and the bullet points on your resume. So you pretty much outline like a lot of information about yourself. And that's also repeated by most people in a company. So if we can bring that all together and take that sample and adjust for sampling bias and do a bunch of statistical adjustments, we can reconstruct what the HR database looks like for a company without having an affiliation with that company.
Mm-hmm.
So yeah.
Yeah, go ahead. Please go ahead.
Oh yeah. So I was just going to say, once we're able to, get a view inside into what's happening in a company without being affiliated to them, a set of early adopters for that information was really in investment management. So, if you're working at a hedge fund or a private equity firm, it's your job to understand the inner workings of companies. So they were very interested early users. So that was kind of an interesting space for us where we've had some success. And ever since that, we've been selling not just into investment management, but also to consulting firms and HR departments themselves, governments, and it's pretty varied. But I think the users are quite varied.
Right. No, so to me, when the world's largest HR database is essentially LinkedIn, and probably they are the world's largest and most updated database. Read that not every kind of worker will be on LinkedIn. Normally, people who are more accustomed to technology and all that, you're more likely to find them on LinkedIn as compared to maybe someone working out of a factory or something like that.
Yeah, that's right.
Now you mentioned that you take information, you compare them, and then you create some insights out of that. So what I'm assuming that let's say I sift through. Let's say I do not have any information about Walmart, but I can sift through all the records on LinkedIn about Walmart, and I kind of construct their organizational chart out of that. Now I go to, let's say, Glassdoor and take a look at various self-reported pay ranges, or I go to levels.fi and figure out some more stuff. Yeah. And then I go to another maybe public kind of records and find. So what I'm gathering is that you, within your technology, kind of try to gather all this information from all these public databases, and you kind of merge it at one place or create insights on top of it. So what kind of information you take, what kind of comparisons or stuff that you provide that probably I won't get it right away out of LinkedIn or something like that.
Yeah, that's right. So all those sites you mentioned, those are great examples of the type of labor market information that's out there. So what we aim to do is basically unify that. So bring everything into one place, standardize it, enrich it, and curate a database. So we have what you can think of as a universal HR database, and which pulls from all these different sources and adjusts for various biases, and basically tries to make that data as easy to use and useful as possible. And once we do that, once we have this nice and neat database that's easy to analyze, then we have created a dashboard so that you can navigate that information very easily. We've set up data feeds and APIs. Sometimes we do custom analyses, some curated reports, and we produce insights. So we have weekly newsletters.
Is there any examples of insight that you can share which are not readily available on these public databases?
Sure. I mean, a lot of times, in order to get these insights, you need to unify across databases. Right. So you mentioned Glassdoor, for example. That's a great set of data. we had a collaboration with Glassdoor kind of recently, where we basically are looking at the sentiment of companies, the facets of satisfaction of these various companies, and then linking that to attrition data. And we can see the attrition rates of companies by role from public profiles and resumes, because we can see end dates. We can see start dates and end dates. So we, and of course, we adjust for lags and things like that. But once we do all of those adjustments, we can have attrition rates of companies. And then we can see, what are the facets of satisfaction that are most predictive of attrition. So that's maybe a basic type of analysis, like what's driving attrition? Why do people leave? But it's very hard to do. I think, even though it's kind of a basic thing that, anyone in any company, anyone who runs a company, anyone in HR, would be dying to know that answer. It's not easy because, it requires merging data from all these different sources. So if you just have Glassdoor data, you're not able to do it. If you just have LinkedIn data, you're not able to do it. If you just have job posting data, you're not able to do it. So I think, all this information really needs to be unified, merged, mapped to a common taxonomy, mapped to companies. You need to construct time series. There's a whole bunch of work to do, and someone's got to do it. So
yeah, I'm sure it's an interesting space to be in. And other than this public data available like on Glassdoor, LinkedIn, etc., do you also have the data of other labor markets, people who are generally not on LinkedIn but still are relevant and important? As I said, probably majority of the workers in a factory or a manufacturing concern, they may not be over LinkedIn or something like that. So do you also kind of collect and collate that data, or is it just more like?
Yeah, so there's really two approaches here. So one is to try to collect data from all sorts of different sources. Like you said, LinkedIn skews toward white collar workers, but there's also JobCase, which has more blue collar workers. There's international equivalents, because even though LinkedIn skews toward white collar workers, it also skews toward English speaking countries. Yep. So if you want to get people based in China, there's a different site for that. There's kind of get people based in Germany, there's a different site for that. So there's all sorts of different sources of information. But even so, even after we collect data from all these different sources, there's still, we're still not getting a random sample. We're still getting a biased sample of the entire workforce. So what we do, we basically try to estimate the likelihood of someone being represented in our sample, which is a function of occupation, but also geography. So basically, for every occupation and geography pair, we estimate a likelihood of them being represented. So let's say you are an engineer in New York. There might be a 90% chance you have an online profile. So every time we see an engineer in New York, we'll count them as representing 1.1 people, sort of the inverse of that likelihood. And let's say we're looking for, teachers in Egypt, let's say, they're not likely to have profiles. So maybe for every teacher, we'll see that really represents 7 or 8 people. So then every time we see a person, we'll multiply them by 7 or 8. So that's that's a little bit of like simple example. There's some complexities there, but for the most part, we'll try to adjust for sampling bias by imposing weights on every person. And so, when we have populations that are less represented, it'll be noisier for sure. I mean, it would be amazing if we had that data, but at least we can ensure unbiasedness in their counts and compositions.
I can sense that a lot of this technology is coming from your statistical and other background that you have your PhD in. And I was looking at your LinkedIn profile, and you've been an adjunct professor at a few universities. I have been a adjunct teacher at many universities doing CS kind of a thing, but so I can see a lot of this coming from that. So wonderful. Okay.
Yeah.
That's interesting. So, before we jump on to the various trends that you're looking at these days, so how your product, how do you sell your product? Who are the end buyers, and what is the kind of pricing model that you guys use?
Yeah, sure. So we're selling to a few different markets. So investment management is our biggest one. That's maybe half, maybe a little less than half of all our clients
They
are
must be interested in salary data and all that, so they can kind of reach out to people. Yeah.
yeah. Salary data is popular, but also just knowing the workforce dynamics. So knowing hiring rates, attrition rates, where people are coming from when they join a company, where they go when they leave, anything that gives them insight into what's happening in a company. So it can be a signal of things not going well, or who's winning the war for talent in some strategic initiative. So these clients are pretty easy to get in touch with. There's a sub market within that called alternative data. So this alt data market is basically investors looking for alternative sources of data, which basically means data that's not from public filings, that's not from public financial filings. So, sometimes it could be like satellite images of cars in parking lots or whatever, foot traffic data. But, our type of data is one family of that. So it's employment data. And within that space, there are industry conferences, and those are very helpful to get in front of people. And then also, it's kind of a small world. So, everyone sort of knows each other. And to that market, we'll basically sell this for anywhere from $100,000 a year to maybe $200,000 a year, depending on how the product is configured and what's included.
How large is your database at this point in time?
It's a good question. So it actually it's not so simple to answer because we sometimes deliver aggregated data, and the more granular the data gets, the bigger bigger files get. So internally in the non-aggregated format, maybe we'll have like, I don't know, 70, 80 terabytes of data, but a single file, once we aggregate it, could be 10 times bigger than that.
And how many attributes across which you kind of collect data against a person or particular human?
So for a person, we'll have their positions. So position level information, user level information. So that could be like their location, their name, something that doesn't really change over time that much. We'll have their skills, we'll have their education, and some auxiliary information like their activities and stuff like that. So that's pretty much at the person level. But then there's a lot of data that is not linked to a person. So let's say job postings. A job posting is linked to a company, but we don't know who gets hired from that posting. Let's say sentiment, like from sites like Glassdoor and things like that. Yep. Also not linked to a person, but can be linked to a type of person, maybe a company, occupation, geography, configuration. There's also information on freelancers, that actually is person level data. There's salary information, which is sometimes person level, but sometimes aggregated data. So it's a little hard to say like what the attributes are, because the unit of analysis is different. So there might be some attributes for people and different attributes for companies and different attributes for states or geographies or something like that.
Okay. So seems like you're sitting on a lot of data and obviously can create some insights out of that. So what kind of trends are you observing these days in terms of labor markets and likes and dislikes of people? I mean, I was reading that. So we were in a work era where everyone was coming to office. We went all remote. Now everyone is asking people to come back to office. I think we'll settle somewhere in the middle. Similarly, there's a sound of recession everywhere. Startups funding are dried up. People are holding on to their funding. There had been layoffs, but there had been hiring. So tell us more about what kind of labor market trends you are looking at these days, both in terms of layoffs, hiring, which geographies are really kind of bursting with business, where you really see a recession coming in.
Yeah, it's a great question. So we have a weekly newsletter that we send out, which is basically a new set of insights every week where we tackle a different topic. And we have a team of economists that write those and try to find interesting things. Now, sometimes those insights are at a very micro level. It's saying, a bunch of salespeople just quit this company. They must not be doing well. So something like that, where it's very granular. But sometimes it's more macro, and we'll take a look at these bigger trends. So there are a few that I think are still very salient. So one is the Great Resignation, and that started last year, but is really, I mean, actually now it's the year before last year. I forgot.
It's a couple of years back.
Yeah. But that's really still going on. I mean, there's still very tight labor markets and different expectations. The employer-employee dynamic has really shifted, and employees are now demanding more and have a little bit more market power, despite there also being a surge in layoffs. So it's these two seemingly contradictory phenomena that are both happening at once, where we have very tight labor markets on the one hand, more worker power on that side, and then also a surge in layoffs. So what's happening with layoffs is that they're really very concentrated in tech. So outside of tech, labor markets are as tight as they've ever been. And within tech, that may be a bellwether for what's happening in the rest of the economy. And there really are quite substantial surges in layoffs. We can track layoffs from public layoff filings and layoff trackers.
Is it a rising trend or a kind of a stable trend or declining trend in terms of layoffs in tech markets?
It's a good question. I think there was a spike maybe 3 or 4 months ago.
Yeah.
And they're still kind of high. We're still above the baseline in tech, but
you're saying you're not observing this layoff trend in other markets and other labor markets, right?
It's not in other markets. Yeah, which is, maybe it will be in the future. But another thing we found that was kind of interesting is that the people that have been laid off have been finding a new job within 3 months for the most part. So the people that have been laid off, it's not great for them. It's obviously not good to get laid off, but they're really not doing as poorly as those who have been laid off in previous recessions. So they're still benefiting from these tight labor markets where it's easier to find a job now than it used to be.
Okay. And are there any particular geographies where you see a more surge in employment as compared to, let's say, US and other markets where there is a kind of a layoff phenomena going on?
Yeah. So we did a piece around who's benefiting from remote work, and I think the geographies that are adapting to taking in these kind of digital nomads, people who can kind of work from anywhere, they're benefiting enormously. So in those, I think Portugal is the one that everyone kind of thinks of. They're very open to accepting digital nomads. A lot of people who can work from anywhere just move to Portugal, but also Germany is doing very well there. There are a few others, but I think Portugal and Germany were at the top of the list.
So in Portugal and Germany, there's a lot of job openings for remote people, right? So where are the most job openings are happening? Where are which region has the most job openings or tech job openings these days?
Yeah, so I would say, when I'm thinking about what's happening in Portugal and Germany, it's not so much that they have more job openings, it's that they have more jobs. So the jobs might be open anywhere, they might be fully remote jobs. Yeah. And so they're not specifically advertising, come work in Portugal, but maybe they're being advertised for some company in the US or India or wherever. But they at least have the flexibility of being able to work from anywhere. So then people opt to go and travel to whatever country they want and work from there. So I think that tends to be a little bit more of a meaningful metric than where the job openings are most concentrated. because when the job openings have a location tied to them, it's mostly in office types of jobs. And I think those are really, the geographies where we see the most job openings are really where we, in the industries where they're bouncing back the most.
So which industry is bouncing back right now?
Good question. I don't have this on hand, but
I'm putting you on the spot on a lot of questions.
Yeah. Let's see. I don't remember.
It's kind of a vested interest for me as well, just to figure out who is hiring and where are the most job openings. So I mean, it's going to be a target market for everyone. Yeah.
Yeah. I mean, I think certainly pharma and health and health tech is doing pretty well. Actually, I mean, housing is recovering a little bit. I mean, that's still an open question, but that had been looking good up until pretty recently. So, the logistics companies, anything, sort of touching supply chains have been like, seeing surges in demand. And that's obviously been problematic for the economy as a whole, but for those companies, they've been, getting a lot of business.
So looking at the trend, you see it's going to persist in 2023, or you think it's already stabilizing and coming down?
It's so hard to say. Yeah, I don't know. I don't know if that I can necessarily like make a call here, but I'm personally feeling optimistic for 2023. I think we'll still see sort of healthy labor markets, little, eased transitions, things getting a little more efficient. And I think actually part of these layoffs that we're seeing were a little bit of a reaction to things being a bit too hot. So
yeah. So
yeah.
I can also tell that I mean, for the last 2 years were like crazy in terms of labor market. So it's kind of a reaction as well. Yeah.
Yeah, and actually, if we look at the people that have been laid off, they're really those with very short tenures who are actually making more money than their counterparts. So they were making about 10% more, and were had sort of like half the experience in the company as their counterparts. So they were sort of junior, underpaid, overpaid, junior, new, and overpaid. So those types of people were really those who benefited from, changing jobs in a very, very hot labor market.
Right.
So that kind of makes me think that even those layoffs were, less about a sort of systematic, secular trend, and more about a correction.
Correct. Now, switching gears and coming towards the last question. So, I mean, let's say if I am a buyer of your product and with this people analytics, how you feel as a company, I'll typically get an ROI on my investment. I mean, granted that for an investment banker, it makes sense to have a salary data and all that. But let's say, I mean, generally a company, how would they get a typical ROI on their investment by using your software?
Yeah. I think if we think about people analytics as a function, or even this new function, which is sort of popping up called talent intelligence, they sit within HR at these companies, and basically they're in the business of deriving insights from data. But people analytics is typically using internal data. So they have these big teams that take on a project, and maybe it takes 6 to 9 months to get some insight about what's happening at their own company. It's a lot easier to just like plug into this dashboard and get that insight at the snap of the fingers. So it could save a lot of time and resources, but also they get the benefit of seeing what's happening at competitors. I mean, so many times when I was working at IBM, we derived some insights which were interesting and like kind of meaningful, but it wasn't obvious, what the decision should be. And I think it becomes a lot easier once you see how you're differentiated from competitors. I mean, strategy at its essence is about differentiation. So being able to see that differentiation is, I think a way to get a higher ROI on people analytics projects inside, an organization. Then for talent intelligence, that's about sourcing new candidates. And, well, mostly about sourcing. It could be about, constructing the right talent composition within a company, through all sorts of channels. But there you really have to know about, like, where the market is. You have to know what's happening externally. What geographies are hotbeds for talent, what are the skills that are in demand, where people come from that might be good talent pools for the types of labor you need. And I mean, these are hugely important decisions. I mean, 2/3 of a company's expenses are for people. And, they go about these decisions with basically nothing. I mean, like really, really not a lot of information. And it's kind of a crazy state of affairs that, the biggest decisions for a company are made with like the least amount of information. Yeah. So, we're hoping that we can change that and make it easy for organizations to, kind of
raising funding, how well it got received by, I'm sure it must have got received well. That is why you have raised funding. But is this a really growing, I mean, remote work and startups around remote work definitely got a lot of funding in the last 2 years, but people analytics is kind of a different thing. So have you seen this as a very growing space, and VCs were kind of very well receptive to that? Or what was your experience? And that is my last question, actually.
It's a good question. I don't think that being people analytics adjacent was really helpful in fundraising. I think fundraising's tricky, and I'm sure, I'm sure all sorts of people had different experiences, but in my experience, it was really the results that were the most compelling. We showed, revenue and growth and clients and retention and all that. And it wasn't even all that important to, in what kind of data we were providing. I think it's important personally. I think there's like a big vision here, a way for labor markets to get more efficient. But I don't think, I don't think VCs were necessarily drawn to the domain in the same way that I'm drawn to the domain, which makes sense. I mean, I'm a labor economist. That's like what I think about all day.
Yeah, absolutely.
But I think they were excited because it's a data company, and data is exciting, and there's real like opportunities and scale there. So I kind of
my previous interaction with labor economists is like watching Beautiful Mind, and I mean, yeah. So. No, Ben, it's wonderful. I think you're definitely, I also run a company. We are a software company, do a lot of professional services. And I do feel that, especially in the last 2-3 years, having people analytics was extremely important for companies like us. I mean, we went on to create our own analytics and a lot of our own intelligence. But companies like us can definitely make use of what you guys are building. So I think the product definitely has its space, and congratulations on your success so far. And looking forward to see how you guys grow and get you back on our show and know about the progress.
Thank you. Likewise. Yeah, that sounds great.